about an hour into this last trading day of the week. Let's kick off with our banner. Economic managers are expecting recovery to begin this month as more lockdown restrictions are eased across the country. NEDA Acting Chief Carl Kendrick Chua told the House Economic Affairs Committee that the projection of an 8 to 9% growth in 2021 would start with a gradual phase this month and would hinge on a boost in government spending through a stimulus package. Economists at First Metro Investments and UANP also see recovery to start this quarter, saying ending restrictions in Metro Manila and Calabarzon by mid-July would allow companies to return to their normal daily tasks, which would help the economy. But they are flagging limited transportation and caution among workers as constraints to faster revival. Finance Chief Sonny Dominguez earlier said restrictions in NCR should be eased further to a modified general community quarantine as quickly as possible to recoup jobs. BSP Governor Ben Diokno also sees recovery as more businesses resume operations. He, however, concedes that the pace of the recovery would vary per sector. Diokno projects the economy to decline for the second straight quarter in the second quarter by 5.7 to 6.7%. The GDP contracted by 0.2% in the first quarter, and should it shrink in the second 3 months of the year, the country will officially enter a recession. Diokno then sees another shrink in the third quarter, but at a slower pace before bouncing back in the fourth quarter. Meanwhile, taxes collected by the BIR and the Bureau of Customs started to pick up in June. The two agencies collected a total of 270.7 billion pesos last month. That's 28% higher from the same month of last year and a reversal from a contraction in April and May. Despite the improved figure, first half collections dropped by 16% to 1.15 trillion pesos. The Department of Finance said this was due to strict quarantine measures that led to a virtual economic standstill in Metro Manila as well as the rest of Luzon. Kicking off markets on the global front, open your terminals with me on your screens here. We're actually seeing a very green sea here across the board. Let's kick off with the US. You can actually see all three major indices, that's the Dow Jones, S&P 500, and the NASDAQ rallying yesterday. That's amid the United States having a print of a better than expected jobs report. So they actually saw 4.8 million jobs created last month. That was above their forecast. And this had overshadowed some concerns that analysts were having that there were these new coronavirus hotspots emerging and might actually disrupt the U.S. economy. The U.S. is on holiday today. Another good point in the U.S. in terms of economic data, the unemployment rate had declined to 11.1%. That's from the earlier 13.3% print, and consensus had actually seen it worse at 12.5%. Something to be noting here, very interestingly, especially with these times, Black and white employment to population ratio show that the rebound is happening faster for the whites rather than the former communities. So this is something to be watching out for. Another thing to be watching out for are the fact that safe haven benchmark gold is still on course for a fourth week of gains. So there are still a lot of sentiments flying towards safe havens, such as gold is actually sitting below $1,800 an ounce. And this according to Chris Gaffney. He is the president of world markets at TIAA Bank. There's a general positive sentiment about how quickly the U.S. is seeing a recovery, but this might be actually leveling off as we continue to see higher case numbers on the virus. Another light at the end of the tunnel here moving our global markets. Drug maker Moderna said a 30,000 patient trial of its COVID-19 vaccine candidate will start later this month. This is after positive reports of human trials by Pfizer and BioNTech SE. So you can see here how markets are actually faring. That sentiment is spilling over into the rest of Asia Pacific and also at our own local boards. You can see here how we've actually sustained. Wait a second, we've actually reversed that opening very quickly here. We have slid by 0.5%. So take a look at your terminal 6331.08. I mean, that is a mountain drop here. We actually, as I mentioned earlier, just a few minutes ago, we had opened strongly in the green, sustaining what was a rally yesterday of 2.5% up. So again, we are not sustaining that rally. Now, Darren Pangan of Timson Securities said that yesterday, that rally was based on, a lot of the PMI manufacturing indices across Asia actually showing some form of a recovery here. And we did also see net foreign buying continuing, albeit at a lower pace than the earlier print of Wednesday. We saw around 60 million pesos in net foreign buying, and also turnovers which were still lower than average, so that's at 7.35 billion pesos. Another one that is cautioning on our local bourse is UBS. They are actually advising stock investors to wait for catalysts, especially related to virus containment. So they're saying that the sustained reopening of the economy and our government stimulus needs to be taken in account before you reallocate your money back into our local boards. They're saying that the extension, of course, we're still under GCQ, at least in the capital. This might mean economic growth can remain weak until the start of the third quarter. And this despite the fact that the index has actually risen about 15% since we've entered into a GCQ. Very quickly, I want to take a quick peek at our sectors here, and which ones are dragging us down. Industrials down by 0.8%. Actually, across the board, you're going to be seeing pain. Safer mining and oil, which is up by 0.5%. We're going to be seeing how markets percolate. Again, this is in stark contrast to the rest of Asia, which has been opening in the green. I'm very interested to see which ones are really dragging down our index here, whether there are specific stocks. You can actually see BPI down by 2.6%, but it seems like, the pain is being shared across different sectors here, and you've still got a lot in the green. So Security Bank, on the other hand, up by 1.5%, together with BDO. That holds a big chunk of the index, so it's keeping it afloat. That's up by 1%. And again, a very mixed bag here, from conglos to banks to property companies. So nothing really is standing out. Let's take a quick peek at our telco. So this from Bloomberg, Converge ITC Solutions. So this is one exciting local fiber optic broadband services provider. According to sources of Bloomberg, they have now selected banks for a planned domestic IPO, and that could actually raise around $700 million. If so, this would be the biggest ever IPO. BPI, BDO, Morgan Stanley, and UBS are all on that deal, and it could take place as early as this year, this pandemic year. Now, what is Converge ICT rather? Right now, it's a fiber network, so it covers just in Luzon around 2 million households, and they're supposed to be expanding nationwide by 2021. They want the broadband penetration to double over the next 5 years. They want to cover at least 15% of households. That's according to their CEO, Dennis Anthony Oy. But while one player, so that's Converge, really hoping to tap markets for its expansion, you've got the so-called third telco player, that is Dito Telecommunity, experiencing some pain here, even as they've actually gotten more time to launch. So you can see on my terminal here that Dito is still in the red, down by 5.2%. I'm just going to take out the 3-day chart for you so you can see how badly this has been sold off. It's down by close to 12% in just 3 days of trading. So what has happened here, they had announced that the technical launch was supposed to be on July 2020, so already this month. What is the technical launch? They're supposed to be showing the National Telecommunications Commission and the DICT that they're able to provide 27 megabits per second speed, covering 37% of the population already on July 2020. Now, they've said, of course, because of the lockdowns, they've had some difficulty rolling this out, and that would actually require 1,300 operational towers. So far, they have 250 operational towers. So definitely far from the target yet, but they are hoping to finish 2,000 this year. They say they're doing their best to get back on track. So they have been granted by the NTC 6 months of an extension. So that technical launch will now be in January 2021. But their commercial launch to users such as us will still be proceeding as scheduled in March of 2021. So again, this had dropped by most in 3 months on that rollout delay news. It's still continuing with that drop, trading at 3 pesos and 26 centavos. I just want to take a very quick peek at whether our own incumbents are actually moving this morning on the back of all of that news, or whether they're benefiting or feeling the pain as well. And you can see PLDT down by 1.5%. That's much low, more pain than the rest of our index is actually seeing. And a very quick check on Globe Telecom as well here. Again, these are two players that are actually in the green year to date. You can see Globe Telecom also in the red, shedding 6 pesos. That's down 0.3%. Now, more on markets later on in the broadcast, with First Metro Securities' Aaron Sai. Okay, let me scroll down to more headlines we're watching this Friday morning. The government has so far sourced nearly $8 billion in loans and grants from foreign lenders for its COVID-19 response. The Philippine Star reported data from the Finance Department showing a total of $7.8 billion has so far been secured, $5 billion of which has already been disbursed to the government. The Asian Development Bank has the largest share in the country's foreign borrowing portfolio that's extending some $2.6 billion in loans to the Philippines. The government is ramping up borrowings this year to plug its budget deficit. That is seen to widen to 1.6 trillion pesos, or 8.4% of GDP, due to the pandemic. But even with the piled up debt, it seems the government is still looking for revenue sources to fund economic stimulus. Economic Planning Secretary Carl Chua says funding stimulus measures would entail additional budgetary support, which he says the government does not have right now. Chua says borrowings must be done prudently to preserve the country's good credit rating, which will be beneficial in the long run, considering the virus's long-term impact. The Accelerated Recovery and Investment Stimulus for the Economy of the Philippines, or the ARISE bill, has been passed on third and final reading at the lower house last month. Lawmakers say they are willing to work with the executive branch to seek revenue sources for that stimulus bill. The government is considering increasing capacity in restaurant, dine-in, and hotel operations in areas under a general community quarantine. Trade Secretary Mon Lopez said in a radio interview, though, that there is no timetable yet for this move because there's still no schedule for the shift to MGCQ for some parts of the country. In a Laging Handa briefing, Lopez said there's not much they can do to change the levels of quarantine areas in the country because leveling is based on science and data. They can, however, work to increase the current operating capacities of businesses as long as health protocols are in place. Lopez said they are now considering allowing an increase in the current dine-in capacity in areas under GCQ from 30% currently to 40 or 50%. Places under MGCQ are already allowing a 50% dine-in capacity. The Finance Department has meanwhile requested an earlier shift to MGCQ in Metro Manila and Calabarzon to jumpstart economic recovery. Socioeconomic Planning Secretary Carl Kendrick Chua said amending the 83-year-old Public Service Act is key in capturing foreign direct investments after the pandemic. Currently, a pending measure is seeking to amend the PSA by clearly defining public services, which is currently interpreted as including public utilities. Now, once the proposed amendments are passed, the definition of public utilities will be limited to power transmission and distribution, as well as waterworks and sewerage systems, allowing more foreign investment in telecoms. Public utilities are subject to a foreign equity cap of 40%, as provided for under the 1987 Constitution. Chua also proposed to have targeted initiatives by region and by industry to attract more investors rather than the current one-size-fits-all approach. Both the PSA amendments and STIRA bill have hurdled the lower chamber, but the measures are still pending in the Senate. The first half of 2020 is something we do not really want to remember, but we do need to take a step back to reassess where we are headed. To help us with that, we have First Metro Securities' Aaron Sai. Good morning, A.
Good morning, Danie. Thanks for having me.
Aaron, okay, past is past, and we want to write off the first half of 2020, but we have to have some pain here. Just give us a roundup of how the first quarters were for you this past year. It's hard to imagine seeing even more pain than we've already seen. To some extent, there seems to be some promise looming on the horizon. So tell us your sentiments today.
Yes, year to date, no, as of yesterday's close, the market, the PSEI was down close to 20%, no, but that was after the run up in recent days, no. But however, what we are seeing is the on the positive side, we're seeing that the market has already discounted the bad news so far, no. As far as that is concerned, we think that the data that we have now have already been in the market, have already been digested in the market. But what we are guarding ourselves against is the possibility of the of more pains in Q2, no more pains in Q2, which can somehow figure its way towards the third quarter and even for the rest of the year. No, what's worrying actually more at this time at this point is the resurgence of the COVID-19 cases, not only in the Philippines but also in other major economies, namely the U.S. So I think
Mm,
as far as the market's discounting mechanism for earnings, as far as what we have been seeing in recently, I think it's already in the market, and I think the recovery from the March 19 lows has proven that maybe the market has overestimated the risks, no, and now
okay.
they are clawing back slowly towards the upside. However, as long as we don't see the flattening of the curve, so to speak, in our case, no, and if we are seeing some resurgence of COVID-19 cases in other economies, which are very vital for the global economy, then the risk still remains, no, and that's fundamentally, no, and when we look at the charts, we are still inside the context of a downtrend. So there's really
Mm,
not much to be cheerful about. No,
right.
the rally that we have seen recently is actually, for me, if you look at the chart, um, can possibly be the late stage of this run up from the March 19 lows, which gives me a little more discomfort. No,
Okay.
as we go near the 6-8 level.
Okay, just to clarify, is the markets or at least the index, is that still moving in tandem with the rising cases? Kasi parang it seems disconnected na now, di ba? Most people are focused on the reopening of the economy. This, as you mentioned, this run-up came after nag-GCQ na and things reopened, and people seem to be ignoring that, yun nga, may cases pa na tumataas.
Yes. Then I think the market again has been, well, let's term it as accommodative, no. And I think they have a case for it. No, we know that we have been learning so far how to deal with the crisis. There are some news actually that a vaccine is available elsewhere in the world, although we don't know yet when it would reach our shores. No, but I think, no, I think market wise, no, based on the price action, no, I think this strong recovery is peculiar or common for a super deep drop, no, that we experienced year to date,
Okay.
especially up to March 2020. So the again as we can see from the price action, that I think this could be a late stage rally, no. So I advise investors not to be too excited about this, but rather to look at this pragmatically, no, since we are not yet out of the woods fundamentally, economically, and even the earnings expectations moving forward. Plus, the charts are saying that we are still in a downtrend.
Okay, but given the first quarter earnings, which some have said are worse than they had expected, because that didn't even take into account, layoffs. It didn't take into account closures. It was just 2 months of 2 weeks rather of the lockdown, and the second quarter will see some pain. But still, with that having been digested by investors already, we are still seeing this uptrend. At least we've broken through the 50 and 100-day moving averages. So what does that say about the expectation on the second quarter? I mean, is everyone already pricing in that's going to be really bad, but then a recovery is due quite quickly in the third and fourth?
I think the rally, the recent rally, more specifically, again, is more news driven, more news driven on the
Mm.
positive developments in the context of the COVID situation. No, yes, we have been seeing 1,000, more than 1,000, or even some 999, no, 999 cases per day. I think
Oh.
the other day, no, that should somehow dampen the spirit of investors. However, with the market is telling us otherwise. No, the market is telling us that, hey, we're looking at another dimension of this, of how the government or how the economy is dealing with this. No, but I think what the market is discounting is just the news. No, so
Mm.
when we see the actual fruition, no, of the efforts of government and different sectors in this pandemic, no, I think what we'll see more moving forward would be a more definitive stance for the market. As of now, if we judge the sentiment of the market based on the past 3 days, no, then we'll say that the market
Right.
has been positive. But if we zoom out, no, if we zoom ourselves out, if we look at the medium to longer term perspective, the market is still not that happy. No, it has
Mm.
been somehow recovering, no, but it hasn't reached that point that it has invalidated already the bearish sentiment that it is in.
Can we still rely on historical PEs for us to have a gauge of a psychological bottomed out PE, or is that completely, off the table right now?
Yes, as always, no, we well, by standard, we always use the historical reference as so that we know where we are in the market. No, so are we way above, or we are we way below? No, but of course, with the special situation that we are in now, the market fundamentally, at the very least, no, well, valuation wise, the market is more accommodative of the possibility that we are way below the average. No, but we somehow nuance that with the appropriate discounting of the future returns or future earnings expectation
Mm.
that we expect from the market. No? So if we are expecting from the market, let's say if we look at the Bloomberg terminal, the FY20 EPS is around 350, and we have seen that it's
Yes.
already a steep drop from around 420 actual FY19. Then we think that applying the applicable, no, applying the relevant historical average for this market, maybe around 15, 16, it's already proper, no, and appropriate, just
Okay.
because we have already imputed the pessimism or the bearishness on the EPS side. No, so when you inputted it already on one of the components of the valuation, which is in this case EPS, then you use the 15 times earnings multiple average, then you get a fair value for the market. However, at this point, the market trading at around 6364, no, the
Mm.
market has already went higher than the longer term average of 15, 16 times. No, at
Correct.
6364, F12M or F12 months PE of the market is already at 17.4. Yes, we are. This is still lower than the pre-COVID. This is way lower than the 9,000 we have seen all-time
Mm.
high. No, but at this point we are no longer cheap. No, even if we look
Yes.
beyond this, even if we look at FY21 for the FY21 earnings per share, Bloomberg Terminal shows
Okay.
around 450, and that's a 30% growth, around 28% growth
Okay.
from the expectation from this year. That would still amount to around 14 times PE. So, and
Wow.
that is not too far from 15, 16 times earnings on the average. So I think, no, unless there is still a very convincing case for an upward re-rating of earnings moving forward, what we are seeing now is a depressed market, but not cheap already.
Oo nga eh. Diba? I mean, just looking at this chart, it's like we've bounced back. The COVID situation has not necessarily been contained yet. We're still in a lockdown essentially, and but the PE is actually going back to the levels pre-COVID. Let's talk about specific stocks. Which ones? I mean, it's hard to gauge right now. We're in the first 6 months, pero since June naman, and there have been a lot of pivots na, a lot of capital raising even that has happened, bond raising mostly. But which companies do you feel were able to quickly pivot? And which ones do you feel will be seeing a very sharper, quicker than expected recovery based on what they've done, and which ones are still undervalued compared to the rest of the bourse?
I think well, for the blue chips, no, let's limit the universe to the blue chips, no, or PSEI, no. I
Correct.
think the most notable sector that has been weathering this storm with grace, no, are the consumer sector, no, namely the staples, no, which are pure gold and RRHI and URC, no. So if you ask us, now if you ask us fundamentally, what are the best sectors that have um, actually they didn't need to pivot, no, they didn't need to pivot
Uh-oh.
the business model has really been somehow proven, no, that they are recession proof or even pandemic proof, no. As we can see, URC and Pure Gold has significantly went higher from their March 19 lows, and at this point with URC trading at around uh, URC trading at around 130 pesos per share. First Metals
Mhm.
Research is actually estimating this value at around 178. So
Okay.
a bit decent return from where we are now. No, even from for pure gold, which is trading at around below 50. No, below 50,
Hmm.
and we have seen that almost 100% of pure gold grocery stores, no, are still open, no, despite the pandemic. And First Metals Research is has been hampering or has been convincing clients, no, to load up on P-Gold, no, since it's March
Okay.
19 low. And today, when the market is trading still at 46 pesos, they are still estimating a decent move to 54 pesos for pure gold. So
Okay.
as far as the resiliency is concerned, I think, no, I think that should go to consumer sector. As far as the pivot is concerned, I think that should go to the largest or the relatively larger property companies, no? Just because of the nature of their business, first and foremost, and second,
Mhm.
the distribution of their revenue sources, no, or their revenue mix, no, which have provided some insulation, so to speak, to the hit. They'll be hit, definitely. No, they'll be hit.
Okay.
Even if even management are very they admit, no, that the second quarter would be somehow ugly, no, and might get uglier in the coming quarter and then coming next quarters, no. But when you look at the business model, when you look at the contribution, no, of earnings for this big companies, no, like RLC and SM Prime, no, even Ali, for to a certain extent, no, we think that they can weather this storm further, no. And in terms of pivot, we think that they have the financial muscle, they have the balance sheet, they have the assets that they need to somehow reposition themselves to whatever evolution that this pandemic would take them to.
Okay, so actually bullish on properties in terms of pivoting if they are diversified. Now, last question, A, before I let you go, on Converge, possible
Okay.
IPO, and also, I mean, who's gonna bet on that, given the fact that, even the incumbents have had to cut their capex, although they're doing really well in terms of year to date. But you've got Dito Telecommunity also saying they're having a lot of difficulty. Is there appetite for this IPO? I mean, a lot have been betting that they would actually IPO.
The Dito iPad, sorry, the Converge IPO is on the publicity level as of now. No, so there has been.
Right.
I'm not sure if there has already been a formal filing of their intention to list in the exchange. But I think, well, first and foremost for consumer, that's a good sign. No, getting 35 billion pesos financing, assuming it's a primary issue, it's definitely a boost to the war chest of the telco, no. And we have seen that the growth of Converge and recently, no, has been, well, quite significant, no? Especially with consumers shying away or maybe finding better options as against the incumbent telcos, no, namely Globe and Tel. However, no, we have seen that that the the space that Converge is operating in, which is more on the concentrated fiber connectivity, no, fiber broadband connectivity. We have seen that there are a lot of players that are already in that space. No, it
Okay.
is yet to be seen. No, it is yet to be seen if they can compete. Compete effectively with good price points. Again, they have been laying down their pipes. They have been rolling out their fibers. But then again, if they can get a good price point for their services moving forward, then that would just be that would just result to margin compression. Which, if you don't have the the level or the maybe the accumulation that Globe and Tel was afforded throughout the years, maybe you can expect that there would be tough times ahead for Converge, even for Dito, no? And that's the overhang for Dito. Actually, for Dito, it's more the news is more news driven, no? But I think when we see the numbers already and more probable that they will see them in the red, I think the demand for Dito would be more, let's say, more
Tempered.
in touch with reality, maybe, no. But for now, for if
Okay.
you're trading dito, maybe you can still trade it, no. Although recently, although last yesterday, Dito's shares have already corrected.
Okay, so it's going to take a while before they actually recover this capex, especially if the strategy is to be cheaper than
Yeah.
what we already are seeing. So thank you so much for those insights and for that update on this first half of the year. That was, of course, Aaron Sai for Metro Securities.
Thank you.
And that's a first look into the business day. Today is July 3, 2020. Catch us again Monday, 10:30 a.m. Have a great weekend. I'm Danie Laurel. We are One News.